Okay, first one. What is the easy definition of an imbalance? That's a cool question. So usually what an imbalance is, there's kind of two different things. So an imbalance is more such like a supply and demand zone, okay? So supply and demand zone is the technical definition of an imbalance simply because they are leftover orders on on the market. So like in this case, this is a prime example. This is a drop. So for every supply or demand zone, there is three different criterias. Three different criterias you need to have, or it will not constitute a true zone. So in this case, here's check mark one, drop one, right? You get that drop down. Check mark two, you get the equilibrium. So at one point in time on the 6-hour time frame, buyers and the sellers agreed on price. So this is your equilibrium, your basal candle. So that's check mark two. And then at one given point in time, the next candle at 6 hours opened up side by side, right? So then we went from, this is very important to understand, we went from balanced, and then once we had that immediate rally, we became imbalanced, okay? So what that means is there was leftover buy orders sitting in this area, and that is an imbalance. I'm not going to go full in depth on supply and demand right now. That in itself will take at least 30 minutes. I'll link my YouTube videos on that in a little bit before the sessions ends, but definitely check that out if you don't know what supply and demand is. And then another form of an imbalance is gaps. So like this right here that we're trying to fill in SPY right now is an imbalance simply because the market does not like to have these type of gaps. So what happens is usually the gaps will get filled. It might take a day, it might take 3 months, it might take 2 years. It does not matter the time horizon, but usually they will get filled. Hope that answers your question. Can you show us how to find supply and demand zones? I don't really want to go full in depth in that because that would take a lot of time. But let me go to the YouTube real quick for you guys because that in itself is like 45 minutes long. But definitely super worth it. I guarantee you'll learn a lot of stuff. Let me go to the next one. What day trading options do you take in consideration with the Greeks? Cool question. That's a very good question. So it also depends on your specific strategy. So if you are primarily a scalper, you will stay in the money contracts. 99.9% of the time, you will be in the money for your contracts. Maybe you can go at the money, but usually as a scalper, you are very close to the money. You're either in the money or at the money. Now, for a day trader, you can be a little bit more lenient with this. So you can go at the money. You can either go in the money, at the money, or one strike out. So basically a little bit out of the money. I wouldn't really recommend going super far out. It's just not in your favor. The only stipulation when that is okay is if it's a momentum based trade. So I'll give you an example. Let's say, remember when Tesla's like, when Tesla's, does its freaking rallies for, hasn't had one for a while, but here's one. So like this massive $50 drop in a day, this is a time where you could buy a little bit further out of the money. So let's say it's at let's just pretend it's at 750 and here's the previous base. Maybe you could do like a 740 put, 730 put, something like that for a momentum based trade, because usually, as people know, when Tesla starts moving, it can move for a while. That's the only stipulation on why you would ever go out of the money when day trading. Is for a purely momentum based trade. Hope that answers your question. How many setups should I focus on? Awesome question. 1 to 2. So what I mean by that is, me personally, I trade pretty much 2 setups only. I trade supply and demand imbalances, or I talked about it before I ended the last session a couple minutes ago. I trade pretty much first touch breakouts. So just to really quickly go over that, just in case, because there's some new people here. One sec. So the first touch breakout would be, I don't trade the initial impulse. the risk to reward is not in my favor. I'm paying too much in premium. The risk isn't that great because, you know, the move has already happened, most of it. So I want to get in on the pullback because it's better for my risk, or I want to get in on the bounce because it's much better for my risk. So I don't want to get in as the move's already happening. I want to get in but prematurely, or I want to get in on the bounce, right? Now, another thing that's something important, the first touch usually, so in this case, this is the first touch, usually is the strongest historically. So like in this case, it worked out a little bit too. This is the second touch, right? So like there's the first breakout, second breakout with that touch. Now, if you look again, the third breakout was pretty lackluster, right? So if you miss the first breakout and the second breakout, I would really kind of just be hesitant to look for more calls or puts, regardless, you know, whatever direction, so really. But I would just be hesitant because you already missed a fair bit of the move in a sense, you know, like most people will be like chasing calls up here, but not realizing that we just moved, you know, $6. Like that's a pretty significant move in a relatively short amount of time frame. So you don't really need to be looking for all these different setups, all these different criterias. Honestly, if you're able to find like one or two that you know that you can do well with, like which there can be tons, you know, there's open breakout strategies, there's momentum based strategies, there's reversal strategies, there's, you know, first touch breakout strategies, like the list goes on and on. It really depends on what you are specifically good at. Me, I could be great at supply and demand, whereas you could be great at an open breakout strategy. You know, like every single trader is different. You know, every single trader is different. So it's kind of hard to just give you a black and white answer. So whatever you find yourself doing the most, you know, beneficial. So like if you go back and check your trades over the last 3 months and you notice, wow, I'm doing really well at breakouts and I'm not doing very well at reversals. That's something you can work on. Okay. Clearly, from the data, I'm doing very well at breakouts. So why are you looking at other stuff? If this is working, why are you, you know, you don't have to be looking at all these different things. If you have your strategy that works, as long as you just, you know, keep improving it and whatnot, then you're good to go. So just to kind of talk about that real quick, what I mean by improving your strategy. So last year around this time frame, breakouts were very easy. And I would also be on the 1 minute time frame. There was very little fake outs. Now you can't do that. There's tons of different fake outs in the market, and I've realized the 1 minute time frame is not reliable whatsoever. So that means I had to change my strategy a bit. So now instead of having, you know, entering on the 1 minute time frame, I now enter on the 2 minute or the 3 minute. So that's kind of an example of how you want to constantly improve your specific strategy. It's not going to always work for you. So you got to, you know, you always have to improve with it. Hope that answers your question. What is the volume indicator? Yeah, good question. So this is called buy, sell, volume totals, period. Yeah, I have one for Thinkorswim. I don't have Thinkorswim up right now, but if you just message me on Telegram or Discord, I'll happily send it to you. It's basically kind of the same setup type of thing. It's just more of a customized script, so you're not going to be able to find it. So if you're curious and want something like this, highly recommend it because it's very useful. Because if you look at it, it's very much showing you for each candlestick time frame, it's saying who's in control and who's not in control. So like all these red, it means the bears are in control. The green means the bulls are in control for that specific time frame. It's different for every single time frame. But anyway, good question. Let's see what we have next. Do you see a gap down in the coming weeks? Hard to say, but if you compare 2008 versus now, it looks very, very, very similar. And if you also look at the month time frames, July back in 2008 was pretty much the last hurrah. And that, you know, what month are we in now? We're in July. And if you look back in 2008, August was when we first had that, you know, the first leg of a downtrend. And if you look at the premiums, there's a lot of bearish premium in the month of August. So that makes sense. And then if you compare it again, during December timeframe in 08, there was a very large relief rally. that was pretty significant. And if you look at the flow, it's really bullish in December. So, and then after December, we had about 2 more months of just downwards trending, and until we finally bottomed out. So I'm not saying it's going to be 100% the same, but we can use 2008 as a great reference point. Hope that answers your question. Can you explain how gaps are created and how to recognize when to remove them for charts? Good question. So, I mean, here's a gap right here. Usually the gaps happen in overnight sessions because, like, if you pull up like ES, you're not going to see that type of stuff. It usually happens in overnight sessions. So that's the gap. And once it actually fills, like when this price action is like up here, you know, like when that price action is up there, the gap is no longer there. You don't really have to remove anything. This is just a gap. Like, so we have this for a gap to the top side, right there to there. And then we have this to the bottom side from there to there. And then let me see if we have anything else short term. We have something like really minute down here. It hasn't fully filled. It's very minute, but that actually, hold on. That is another gap. So these are just something you want to be aware of. It's not going to be like, okay, it's going to fill right now. This could fill in 3 months. It could fill in 6 months. It really depends. So like, I'll give you an example. Where is it? Right here. So this was back a year and a half ago. There was a little kind of gap right there. It took us until now to finally fill it, right? So it doesn't have to be automatically filled. It can take a while. Oh, this is a long question. One sec. Okay, say you're in the trade and riding it out. Would you advise to add on to your position on pullbacks like on another bull flag consolidation when already in profits, or just let the position ride and trim instead? Yeah, that's a pretty good question. It really, it kind of depends on like a lot of different situations. It depends if we're in a range bound day, if we're in a clear trending day, you know, if there's any market catalysts such as like federal news, et cetera, depends on how much has already happened. Like, for example, like if you entered calls here and you're trying to enter more up here after it just ran an extra couple dollars, that doesn't make sense. You want to be taking profits there, not adding more to your position. So it really depends on a lot of different factors. You know, if it's still like relatively like hasn't moved just yet, then sure, you might be able to add a little bit more to your size. But like if you're already in a good amount of profits, then it wouldn't really make sense to add more contracts. It would actually make sense to cut some of your contracts because like it, you know, the further up it goes, the higher the chance of a pullback, and you don't really want to get caught in that. Hope that helps. Any trading strategies you recommend? Kind of talked about this already, but supply and demand, learning how the market works, such as what the market makers do, their functionalities, looking for stop hunt runs, looking for key areas to trade off of, such as the 200-day moving average, the VWAP. Yeah, you don't really need to overcomplicate things. You don't need 10 indicators. You just need price action, volume, maybe a 200-day moving average, maybe a VWAP. That's pretty much all you need. You don't really need much else. Best way to use the VWAP. Made a video on this, but just to really quickly go over it. One sec. Let me put the VWAP up. Okay, hold on. Let me configure it real quick. Okay, so pretty much just to really simplify it, if you ever, I'll send the link in on the YouTube in a second, but just to simplify it for now, if the price action is above the VWAP, so what a VWAP is the volume weighted average profile. So it's basically saying where this price action is deemed fair in a sense, like where the most bang for your buck will be. So it's pretty much saying if the price action is above this line, it's usually considered bullish. If it's below this line, it's usually considered bearish. That's pretty much to really sum it up. If you want to check more, I'll link my YouTube a little bit later before the class ends. How do I prepare for the market the night before? That's a pretty good question. Truthfully, I don't. I'm going to be honest. I don't look at anything the night before. I usually just make all my analysis and whatnot in the morning, because like literally anything can happen overnight. Like the futures market can gap down 10 points for all we know. It could gap up 10 points for all we know. So if we make a thesis now, it can just be completely invalidated in the morning. So I would suggest maybe waking up a little bit earlier, before market opens, and just see how pre-market looks. That's probably your best bet. How to obtain more confidence in trading? Great question. I would really recommend paper trading. A lot of people scoff at it, but how are you going to practice if you don't take trades? So then you want to just continue so like you want to treat your paper account as is the real account. So like sometimes people use like $100,000 paper account and they're trading $5,000 real money. That's not how you want to do it. You want to have a $5,000 paper account and a $5,000 real account, right? So this way you basically act like, yeah, sure, it's a paper account, but you treat it as a real trade. You have your risk rewards, you have all your game plan, et cetera, et cetera, et cetera. Very, very important, because you don't really want to practice with real money, because sure, you'll get good experience, but you could also blow a massive amount of money, and it's just not really ideal in the long run. Can you show us your 200-day moving average strategy? That's a pretty good question. One sec. Let me just throw it up here. So one sec. Okay, so it doesn't happen very often, but usually I find the most success with like the 5-minute time frame for intraday for looking for reversals and stuff. So let me see when we get a good 200-day. Here we go. That you could use this for an example. So the 200-day usually is an algorithmic area. Hedge funds love to buy and sell around it. So when we flush below it, this moving average acted as a resistance, right? So like you don't want to chase this shit. You already missed a good amount of move. You don't chase this. You wait for some sort of a pullback. In this case, you got a great clean setup pullback. If you look here, the price action came right to the 200-day, rejected it and respected it. So that is your actual perfect entry right there. So the 200-day doesn't happen very often, but when it does happen, it's very, very powerful. Let me try to find another one. Right here. We get the rejection, we get the, let me try to find a bounce. There's a bounce somewhere, like right here. So this is something that people get confused. They think, oh, it didn't actually bounce off the moving average itself. It doesn't have to. If it comes really close to it, and if it holds its ground right there, this is fine. This to me is a respection of the 200-day, and it's fine. And if you notice, if you take these type of trades, you take off the 200-day or the 300-day, they work exactly the same, or even the VWAP. These all work the same. They're all basically fair value areas. Look at your risk to reward. Your risk to reward is extreme. Like let's say you miss most of it, like you miss like that, and then so that's an extreme case, right? You already know where your first target is, somewhere up there. Like your first target is somewhere up here within these last participation zones. Now this is still a 3-to-1. Now you have to realize your stop loss is not going to be this. If the price action is going in your favor and we're say here, why the hell would your stop loss still be down here, right? So now your stop loss is going to be gradually increasing with you. So now we're probably underneath this recent low, right? So that once 3-to-1 risk to reward trade now turns into a 25-to-1 risk to reward trade. Move your stop loss up with your trade. Don't let it be the exact same thing, because it's basically like, wow, I'm way up here, but I'm letting it go down here. Like you're really giving up profit and going for a loss if you keep the same stop loss. Move your stop loss with your trades. Hope that helps. How do you know when to not sell early because the trade will keep running? That is when you don't know. That's a good question. You don't know. That's why you don't want to blow your load, basically. So like say you have 5 contracts and you take 5 contracts right off the table right here, but then the move does this, right? You didn't necessarily know that was going to happen. So like that's why you want to use what is known as the runner method. So you want to trim along the way. So maybe, okay, I have 5 contracts right here, but maybe I'll take off 3. All right, so I'll secure some profits. And then maybe I'll take another one off here. And then maybe another one off here. So like this way, you're securing profit along the way. You're not just fully cutting everything at once. Hope that helps. What was the indication of being bullish today? Good question. So that's a pretty simple one. So if you look, we had a demand zone from the prior day right there. We came right into that demand zone. And we also respected the initial right there and the initial right there. So we respected the trend lines, and also we came right into a demand zone. If you look, remember what we talked about with demand zones and supply zones. These are leftover orders. So this case for a demand zone, these are leftover buy orders. Look how aggressive we bounced out of it, right? And that's why I like trading supply and demand, because my stop loss is very tight. So like, let's say I enter right there. There's my stop loss underneath that recent low. My first real target would be somewhere up here where we first got rejected. That's a 4-to-1. Let's say we go to high today. That's a 6-to-1. You kind of get my point. You get some really good trades. How can you spot a huge monthly level? That's pretty simple. You go to the monthly time frame. And okay, where's the most current wick? Okay, so there's a wick right there. That's a level. There's 2 wicks, so that's 2 months of price action. There's a level. There's our last month's level. So like, you know how most people are like, you need 2 to 3 touches? That does not matter when you're on a monthly time frame, because this is 1 month of price action. You look for wicks, and that's pretty much it. These are how you find your monthly levels, and it takes all of 60 seconds. You don't need, so like when you start going down in time frames, such as like maybe the 4-hour or the the 6-hour, whatever, then you want to have multiple touches. You want to look for 2, 3 touches, etc., etc. When you're on the monthly or above, such as like the quarterly or anything like that, you don't care about that. You just look for the wicks, or like, for example, like there's one right there. Here's one. So like there we go. In a matter of what, like 90 seconds, I just found all my hard levels. For a beginner trader, do you think it's okay to start with options starting with a $1,000 account? Absolutely. But first, you want to know how the hell an option works. Some people that are new have no idea how an option contract works. They don't, if I ask them about what the Greeks are, they couldn't explain it to me in depth. So first, I would recommend knowing what an option contract is, how it is, how the back end works, such as like the Greek, such as Vega, theta, gamma, delta, all that type of stuff. Understand what a market maker does, its role in the functionality of the distribution of the trades, all that type of stuff you want to understand. But yeah, once you start like understanding that type of stuff, it's perfectly fine to start option trading. You don't even need $1,000. You can grow from a $500. Can you show how to use the indicator? Okay, so this is, so on TradingView, it is, where is it? The couple one down right here, it's either long position or short position. Let's say, excuse me, let's say we're in long position. Just do a random example. Say I entered off this bounce, maybe right here. Okay, then I would keep my stop loss underneath that recent low. So there it is, move it down there. And then I pretty much go to the next real participation zone. So we got rejected here. So that's my first major target. And then you kind of, you be realistic with yourself. Like you want to look for the recent participation zones, which in this case is right there. Do you have a list of most important events on the economic calendar? Not necessarily. I would recommend using Forex Factory, because if you're not familiar with it, it actually gives you a lot of information about each of the economical data. If it loads, I'll give it a second. Maybe there we go. So like if you look here, I'll give you the entire month of things. And then, so the yellow is the least important. The orange is medium importance. And then there's a red, it's not right here, there's red, it's the most importance. And then you can also get like the details about it, like why it's important, what is it, etc., etc. It's called forexfactory.com. Highly recommend it. How do you enter a trade? What's your confirmation? I usually enter on the 2 minute, the 3 minute, or sometimes the 4 minute, depending on how I want to be aggressive. I do not enter on the 1 minute time frame. After taking a long needed mental break, after taking large losses, how to come back with good mental strategy? Pretty good question. I would recommend just coming back with really light size. So like maybe just, excuse me, maybe just trade like one contract at a time, just try to get your confidence back. No need to, really rush into the process. Try to, get your feet wet again. Make sure you're journaling and understanding what you're doing incorrectly and what you're doing correctly. Hope that helps. Explain this again, but people that might have joined late, this is the buy sell volume. You can check this out in TradingView. It is also offered on Thinkorswim. If you won't be able to find this on Thinkorswim, so if you want the script, it's a customized script, just message me on Discord or Telegram and I'll happily give it to you. One second, let me answer some more questions. That's a good question. I answered this one before in a YouTube video. Should your stop loss be a percentage or on the chart? Like, should I use 20% or no? So that's a very good question. I do not have a generic stop loss. Most people are like, hey, Scrub, what's your stop loss? It's different for every trade. One trade, I could get a great entry. My stop loss is probably like 10%, maybe, 7-10%. Whereas maybe I didn't get the best entry, but the trade is still valid. Then probably my stop loss can go upwards of 30%. It's different for every single trade. And you don't want to just have a generic stop loss in the back of your mind. You want to look at the trading, you want to look at the chart. You want to look at the chart itself. It's like, okay, are we still in structure? Do we break structure? Are we invalidated? Where's the key levels? All this different stuff. I made a video on that as well. I'll link my YouTube in a couple minutes. I just want to keep looking at these questions. Oh, that's a good question. From a mental psychology point of view, I am down $30,000 for this year. Have not had a green trade month all year. I've done everything I can to learn and improve my losses, but my wins are very minimal. Can't seem to win any trades lately. How can I shake this off? Should I go do something else? Good question. So what I think, not to over assume, but I'm going to assume anyway that you're too busy thinking about the money. Like you're thinking in the back of your head, yeah, I lost $30,000. How can I make that back immediately? And then when that happens, you have false expectations for yourself. You're just thinking about that money, the money, the money, the money. So then you get you basically take some really sketchy ass trades, right? So you just have to realize, hey, yes, I lost this amount of money, but if I stay the course, if I put in the work with the educational aspects, all that type of stuff, all that jazz, then the money will come back inevitably, right? So like for me personally, thankfully, my learning curve was not that long because I was thankful and I picked up a really nice trader along the way that would help me out. So just for a side note, highly, highly recommend investing in a mentor, especially if you have no idea what the hell you're doing, because that person has the experience and they can guide you along the way, pretty much tell you what to do, what not to do, and it'll save you a lot of time. But anyway, so my learning curve for the first year, I lost about like $5,000, right? But then since I invested in education, blah, 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 I ended up getting that $5,000 back because I knew what I was doing, right? So like, don't think about the money lost, just think about the overall end goal. It's like, okay, yes, I might be down money this month or I might be down money this year, but as long as I put the work in, that money will come back and it'll be perfectly fine. So just try not to think about the losses you have right now. Just think about the big picture aspect. Hope that helps. How to avoid being biased. Do you have any tips to clear your mind for trading? Good question. So for my active trader, I have both contracts on the chain. I have my calls and I have my puts open. So at any moment in time, I am ready to flip biases. And then also you just have to realize the stock market doesn't owe you a single thing. It does not care. Oh, Joe Schmo, you have a rent payment due tomorrow. You owe all this money on your mortgage. Like, no, the market doesn't give a shit about that. It'll take your money, right? You just have to realize you shouldn't have a specific bias, because when you have a specific bias, usually that can lead to failure. And when that failure happens, usually you lose money. So something to help clear your mind, I would really recommend like meditating before you trade, even if it's like 5 minutes, 10 minutes, just kind of sit there by yourself and just try to sit in silence, just really clear your mind. That'll be really helpful. Hope that helps. Yeah, should I wait out the first 15, 30 minutes because of the volatility? Absolutely, 100,000%. If you have no idea what you're doing and and you're not used to the stock being up, down, sideways in the first like 5, 10 minutes, I would highly, highly, highly recommend basically being disciplined and not taking a trade until like 15 or 30 minutes into the market, because usually those are when the actual cool setups happen, because the most reversals happen around anywhere from like 9:45 to 10:30 a.m. Eastern. And this is a prime example. 10:25, right around that time frame. Look at that reversal. It was clean as shit. Did great last year. This year is killing me. Yes, because you're not changing your strategy. Last year market is 5,000% different from this year's market. The market is no longer going straight up. Fix your strategy. It's not the market's problem, it is your issue, and you have to figure it out and identify it. Last year, bullish breakouts were awesome. This year, you have to realize we're in a bearish market. Bullish breakouts are no longer very consistent. So you got to fix that. Do you recommend to enter when the candle succeeds previous candle? Yep or doodle. You want to make sure that you're entering on the correct plot. So let's say my confirmation is, okay, I want to enter on, say, the 2-minute confirmation, right? That's when I want to enter and or exit. So let's say it is, I don't know, let's say it's 7:23. Okay, that 2-minute confirmation has not happened yet until 7:24. So I would wait specifically for that extra minute to see, okay, how is that 2-minute plotting? Are we going to plot above? Are we in my direction? Are we plotting neutral? Are we plotting bearish? Like where are we going? And if it's plotting in your favor, so like if you're thinking you're bullish and it's plotting above and it's bullish, cool, you can possibly enter if the volume is there. Or if you're thinking bearish and it's plotting below, awesome. If the volume is there, you can enter. Trading SPY or QQQ, do you recommend doing them 0 DTE or better to get next day or even weeklies? Truthfully, 0 DTEs are fine if you don't backhold, if you don't have hopium. Like if you have actual risk management and you realize, wow, this trade is not working out, it's been like 30 minutes, and it's choppy, sure. And you don't hold on to your losers, sure, play 0 DTE. But if you realize, okay, I have hopium, I usually move my stop losses down, etc., etc., then I would really, if you can afford it, I would highly recommend buying the next day or the weekly contracts, simply because the theta won't completely kill you. How do you make sure to trade with institutions, not retail trade? Excuse me. How do you make sure to trade with institutions and not with retail traders? Cool question. I answered this the last class, but let's just do it real quick right here. So say there's a supply zone, say there's a demand zone, Anything in between is considered chop, is considered retail money, is considered small fry money. The only thing that moves the market is supply and demand. And you have to think about it, who has the most supply and demand? The institutions. So when we get these imbalances, the supply zone or the demand zone, this is where you want to enter, because you're entering with institutions. So your risk to reward is highly in your favor. This is why I like the supply and demand method, because of that. What else we have here? Let's see. What indicator? So I'll do it one more time for you guys. One sec. Buy, sell volume. Do you use Fibonacci levels for your analysis? Yes, I do. So I've watched your video on the supply and demand zones. Can you find a recent one just to see what it looks like? Cool, awesome. Appreciate your support, by the way. I'm glad you found some value. 1 second. Let me just find a zone real quick. Right here. Well, there's a couple, but here's one right here. So this is the one actually. We'll do an older one. So drop, base, rally. So we would go from the top of the body to the lowest wick. And if you pull it over right there, if you look, we actually aggressively bounced off of it in the pre-market, and then we went up almost like 8 points. So definitely I would recommend checking out supply and demand. What is the best advice you were given when you were new to trading? That's a good question. 1 sec, let me think. Take profits. Take profits. Yeah, take profits, because I didn't take profits and I scoffed at them. And yeah, 100%. Because I would see like 50 bucks and I was like, nah, shit, this is crap. But in the grand scheme of things, I wish I took that $50, because if I did that and compounded over and over and over, that's a lot of money if I do that consistently for months. You know what I mean? So like, don't scoff at profits regardless of what it is. Are pattern breakouts high probability trades? Yes and no. It depends on the market environment. It depends on which trend we're talking about. It really depends on a lot of different things. Average down into your green? No, no. You don't average down on losers. You don't do that. If anything, you would average down one specific time if the trade is still in your favor. If there's still, you know, and if the like your thesis is still intact, sure, average down one time though, because the more times you average down, if you think about it, you're literally buying more theta and throwing money on the fire, and it could just not work out. So you don't want to do that, because you're just basically digging yourself into a hole. 1 second. Do you use the 200 EMA or the SMA? So EMAs are for short-term trading, so exponential moving average. SMAs, slow moving average, are for longer-term trading. What time frame to use the VWAP on does not matter. It's all intraday basis. You can use it like it's going to be the exact same thing. There. It's the same thing pretty much. It's all the same. Now the only thing that's different on the larger term time frame is it's what is known as the anchored VWAP. So that's you can use that for larger term time frames, but the VWAP is only for, like, the specific VWAP is only for day trading. On sex is still reading. What is the lowest time frame you will go down to for a supply and demand zone? Cool question. 7-minute time frame. That's your absolute lowest, and that's usually only for intraday basis. Why 2 moving averages instead of just one? Because multiple moving averages can show you different things. Like a 9 EMA can show you not as much information than a 200-day moving average, you know. So that's why I usually use, like, the only moving averages I usually use So for trend wise, like finding the overall trend, I like to go on the hourly time frame with the 20-day moving average. Usually shows a good trend. For intraday type of stuff, I usually use the 50-day moving average, the 200-day moving average, and then the 300-day moving average. I don't use the traditional like 9 and 21 or any of that stuff. I just look at the larger ones because they hold more merit, and you can get better. You can get much better risk to reward trades off those areas. Scrub, just started to meet you. Really enjoy your stuff. Awesome to have you here. Cool. Thank you. Appreciate your support. I'm glad you're finding value. That's awesome. One sec. Do you have a stop loss even if you plan on swinging it? Yes. Yes, you do. Because yeah, you might be swing trading it, but there's still going to be, you still want to understand if it doesn't go in your way, you still have to have a stop loss, right? Like you have to have a plan for every single trade. Every single trade, you're going to be like, okay, this is my invalidation zone. This is where I'm going to take, a loss in a sense. So definitely always have specific areas. Max account percentages for a trade for a small account. That's a cool question. So it really depends, honestly, on you. It depends on how aggressive you want to try to grow your account. If you want to go, like, let's just use $1,000 for an example. I would recommend no more than 40% per trade. So that's $400 position, like no more than that. That's for like an aggressive sake. If you want more of a conservative sake, maybe like $200, 250, something like that. So it really depends on you and how fast and aggressive you want to be with it. Do you trade the open? No, I do not. Any tips on how to properly size your trade, and should you be consistent with that same size every trade? Yes, you should. You should be consistent with all of your trades until you can prove yourself otherwise. So a lot of times people, what's the word? They jump the gun. They jump the gun. They're like, oh, I just had 3 days of profitability in a row. Time to size up. Like, that's ridiculous. That's absolutely ridiculous. You show me that you're profitable and you're consistently profitable with very little losses for an entire month, then yes, you can size up gradually. But if you're only trading like 2 3 days in a row and you're green and you're all like hot cross buns, I'm gonna size up. That's ridiculous. You're not ready. Because if you jump the gun and you size up, what do you think can happen? If you're not ready, you can lose a lot of money. So there's a specific mentality and methodology on how to size up correctly. How long did it take you to become a profitable trader? That's a good question. I think it was uh, uh, like a year or so. Like I started finding consistency like a year in. I started finding more consistency like a year and a half in. Currently, I'm almost like 2.5 to 3 years in trading currently, something like that. One sec, just still reading. Oh, okay. That's a good thing. That's a good comment to say. Okay. One of the hardest things I'm dealing with is discipline. I know what a good setup looks like. I have good risk rewards, but I find myself taking trades at boredom or FOMO trades. Uh, well, you already identified the issue. You don't want to sweep it under the rug. You identified the issue. Now it's up to you to take action upon yourself and work towards that. Be like, okay, I'll give myself a 30-day limit. And in this 30 days, I want to make sure I don't take any boredom trades. I don't take any FOMO trades. Challenge yourself, because if you just keep sweeping the issue under the rug, you're not going to improve. Any tips on discipline? You learn this more from personal experience, truthfully, because like when I first started learning, people could tell me all the time, yo, you should take profits, yo, you should do this, yo, you should do that, etc., etc. I didn't listen. I didn't listen until I learned it my hard way. So like me, my learning the hard way was this. So when I was first starting trading, I started on a small account, right? And at the one time, I was up pretty significantly for my account size. I was up like $700, $800 for that specific day on a small account, mind you. That's a pretty damn good gain. But I'm thinking to myself, nah, this isn't enough. And I had the hubris and I had the greed aspect. And what happened was I was like, nah, I want that first $1,000 trade. And all the people that would whisper in my ear, yo, you should take profits, you should take profits. I'm like, nah, 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 nah. I'm gonna do this. And then what happened the next day? The market gapped down significantly. Long story short, my really big winner turned into an $1,100 loser. Ever since then, I've had the discipline and I haven't had any close to a loss like that ever again because I know now to take profits. Can you answer my fib question? What was your fib question? I didn't see your question. Apologies. Just ask again. So can you show us the significance of the 300-day moving average? It just holds a lot of weight as well. Not as like funny enough, it doesn't hold as much weight as the 200-day, but it holds a significant amount of weight. So like here, let's see if I can find a good. So like right there, that's absolutely perfect. I don't even have to look for it. 300-day moving average, 5-minute time frame, right there. Look how aggressively it bounced off of it. Very, very aggressive. At what percent profits do you take your first profit target? I don't have any percentages. I don't use percentages for stop losses or for profit targets. It's like if it gets to my chart, if it gets to where I want it to, I'm going to take profits at it. I don't care if it's 12%. I don't care if it's 40%. I don't look at the profit percentages. I just take where I'm supposed to, in a sense. I have the predefined target in mind. I'm going to take it. I don't care about the overall percentages. What time frames do you use? What time frames do you use to scan, and what time frames do you place to trade for weekly option trading? Good question. I usually use anywhere from if we're talking like day trading, probably anything under like the 10-hour time frame. I don't actually enter the trade unless it's like the 2-minute or the 5-minute, anywhere from like 2 to 5 minute. Play around with it, whatever you're most comfortable with. How do you know when it's okay to buy when price just keeps going down or up? You gotta wait for some sort of consolidation aspect. Like a lot of people, unfortunately, like they buy the dip here. They try to buy calls like somewhere in here when it's where is bullish? Where do you see in this last 10 minutes any bullish pressure stepping up? The answer is none. So don't just blindly buy a dip because it just dipped $2. So what? That doesn't mean it's time to buy the dip. You gotta wait for confirmation. I appreciate how you explain things in a simple process. Well, that's awesome. I thank you for that. Do you offer mentorships? Yes, I do. If you're ever curious, I'm offering a 30-hour duration, 3-month mentorship, basically A to Z on how I trade. Really, really cool stuff. If you're ever curious about that, just message me privately and we can talk about it. Thank you for your support and your kind words. It means a lot. I often miss opportunities because I didn't get in. So how to fix that is paper trading, because you're lacking confidence. You're lacking conviction. You're lacking confidence. That's why you're hesitating to get in. What is your stop loss for swing trades? That's a cool question. My maximum stop loss, only if it's long-term horizon, like a couple months, is 50%. If it's shorter term time frame, it's like 30 to 40%. So it really depends. It really depends on the time horizon for sure. What setups will you always size up on when you see? Right here. Right here. All day long. All day long. 300 moving average inside of an hourly supply zone, same exact 10:30 time frame, or it's like clockwork. And if I'm wrong, who gives a shit? My stop loss is right there. You know, like my stop loss is, let's say I enter there, my stop loss is there. Who gives a shit? Right? Like who cares? I size in on these type of trades all the time because high conviction trades, yeah, 100%. Tips for not entering and exiting trades prematurely. I kind of touched on it briefly, but you want to be mindful of the time frame you have set in your mind. So if you have a time frame in your mind, hey, I want to enter or exit on a 2-minute time frame, you wait that 2 minutes. You don't enter 45 seconds in, you wait 2 minutes. Right. So like sometimes it's going to take discipline, but usually you don't get faked out nearly as much. Hold on. No, here it goes. With Fibonacci's, do you constantly update them as higher highs and lower lows confirmation? At what point does the previous and current fib retracement cancel itself out? Like if the previous fib is from high to low and the current fib is from low to high, if the candles are rejecting the previous 618, but the candles are sitting above the new fib 236, do you look for a rejection on the previous 618, the new one? Oh, okay. Okay. Yeah, so I think you're using too many fibs. The way I use fibs, truthfully, is like pretty simple. I look for the most current, like, so in this case, okay, let's see, Fibonacci retracement, bottom. So like, there's the recent peak, there's the recent trough. So if I'm thinking possibly bullish, I would go from bottom to top or top to bottom. If I'm thinking this, if I'm thinking bearish, I go from bottom to top. And then there's my levels. I don't make multiple Fibonacci's. I literally just make one because this is fine for me. I truthfully probably don't use Fibonacci's as much as I should, but I use a lot of supply and demand. So like I know where the participants are willing to step up anyway. And the only thing I care about for the Fibonacci is like the golden pocket region. So right there, or right there. Like these 3 different gold lines, those are my Fibonacci levels. So I don't care about anything else pretty much about the fibs. How long did you trade one contract before sizing up? Cool question. I kind of talked about this already, but like if you are showing consistency for a month or 2 months and you're doing well with one contract, maybe even 2 contracts, then you can size up more. But you don't want to like skip the steps. You don't want to be like, okay, I'm only in 2 contracts now. Let me open like 6. Like you got to do it. You got to do it like gradually. So like, maybe instead of opening 2, maybe try 3 for a couple weeks. You know, and then okay, reevaluate. Am I doing well? Okay, am I doing well? Let's maybe open 4 the next month or something like that. You know, you want to just gradually size up and size up. You don't want to just skip steps because once you skip steps is when you start to take losses. How did you learn how to trade? Cool question. Most of it was self-taught, and another one I personally still have a mentor He's a 7-figure trader, so I've learned a lot of stuff from him as well. What other advice were you given as a new trader besides take profit? Study, 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 study. You're not going to be better if you don't study. You're not going to be better if you don't review your trades. If you're the one that, if you haven't reviewed trades in weeks or months, that's your first priority, is to study your trades, because if you don't understand what you're doing wrong, you don't review your trades, how do you plan on fixing it? Last time for this indicator. Last time. This is the buy sell volume for trading view. If you want my think or swim one, message me privately on Discord or Telegram and I will send it to you, since it is a customized script. Do you plan on swinging monthly puts into August, considering the pattern seems to be following 2008 dip? Yeah, I think I'm going to open puts if we end up filling this gap and we're somewhere up here. That's probably when I'll start positioning into puts. I'm not going to enter just yet because I'm probably can get a better entry, but definitely something to think about. How to message you? That's a good question. So I'll put my Discord tag and then I'll put my Telegram tag in here. So that's my Discord. My Telegram is, what the hell is my Telegram? One sec. There we go. Okay, there's that. And then also for the people that asking about my YouTube, that's my YouTube. Tons of cool videos on here. Definitely suggest checking it out. Well, let me go back up and check out more questions. If you guys have any other questions, feel free to ask it now, because I'm going to end this soon. How do you enter on a consolidation such as a bull or bear flag? Depends on your bias. Like if you're bullish bias, and you would ideally enter somewhere on the bottom, like right down there. If you're bearish bias, you look for a rejection type of thing. So it really depends on your specific bias at that moment. I thought Brad said Fibonacci's must be drawn left to right. They're supposed to be drawn either trough to peak or peak to trough, and that's pretty much how you want to do it. Depends on how large of a time frame you want, like how big of a time horizon. Like you could technically go from here to here. Like there's multiple different ways of how to draw. It just depends on your overall. Like, are you looking to day trade or are you looking to swing trade type of thing? So, but all you really got to know is from trough to peak or peak to trough type of thing, like that. How do you distinguish from pre-market volume highs and lows into the open and getting faked out, and then trend reverses immediately at the open? Cool question. Honestly, that's another reason why I don't trade the open, simply because it can be really volatile. I would really suggest just waiting like 10 to 15 minutes. Truthfully, you'll save yourself a lot of headaches and a lot of money. Just a pro tip. How do you make the most times? How do you make the most time with your mentor reviewing trades, trade ideas? Pretty much reviewing trades and just seeing other perspectives and whatnot. Very helpful. How long have you been trading? Asked this already. 2.5 years, give or take. Not really sure the exact time frame. Can you go over the trades you took today? I was actually gonna post up my my trade reviews a little bit later, so I'll post that anyway for you guys, just more in depth for you. What is your favorite setup for entry exit on a day trade, indicator, candle? Kind of answer this as well. My favorite setups are supply and demand, first touch breakouts, trap and goes. I look for VWAP respections. I look for VWAP rejections. I look for 200-day and 300-day moving average, rejections and respects. Yeah. I'm pretty sure I answered this question again, but I'll do it again for you. Do you recommend doing 0 DTE next day or next week? Just to reiterate, I would not recommend 0 DTE trading if you are new and you have bag holding tendencies. If you can afford it, buy next day or buy the weekly. If you can manage your risk properly and manage your emotions properly, 0 DTE is perfectly fine. Do you only trade SPY and QQQ? Usually I trade indexes and tech. I'm very favorable of tech and indexes for sure. Which time frame are you entering with moving averages? Honestly, I prefer the 5-minute EMA, excuse me, the 5-minute time frame with intraday stuff. Obviously, the higher the time frame, if they respect on like the 20-minute, that's much better than the 5-minute. But I find a lot of success with the 5-minute time frame for intraday stuff. How many trades do you average per week? Oh, that's a good question. Like, I don't know. I guess it depends on the week, truthfully, but probably like 5, maybe. I'm not sure. 2 to 10 2 to 10 trades. It really depends on the day, depends on the week. I don't really trade that often. I only look for highly probable setups. What ticker should I have pulled up for SPY? You want to know what Microsoft is doing, you want to know what Apple is doing, and you want to know what Amazon is doing. They have the highest weights in the ETF sector. Mick, go to forexfactory.com for your answer for this. All the economic news, forexfactory.com. Highly probable setup, answer this one already. You need volume. It needs to be in your structure. It needs to be in your favor. Price action needs to be in your favor. I like to use VWAP and 200-day moving average. What would you say to people when they ask what social value a trader brings to society? Not sure how to answer that question, so I apologize. I'm just going to skip it. Do you trade futures? No, I do not trade futures. How many contracts do you buy? Depends on the day, depends if I'm downsizing, depends if I'm being aggressive. One day I could buy 2 contracts, one day I can buy 10, it's a little bit different for me. I do use TradeZilla, but honestly, I don't know if they have a referral system yet. That's something I can look into. I'm not sure though, honestly. But I would really recommend getting TradeZilla though. Personally, do you think SPY is looking bullish or bearish? I have no opinion because I trade both sides. But I am looking a little bit more bullish. Do you have a 9-to-5 job since you don't trade that often? Why do I have to trade often? This is actually a great question. That's the biggest misconception ever. Just because I trade 2 trades a week doesn't mean I don't make my profits. I don't have to trade every day. Not every day is a trading day, right? Just because, I didn't trade Monday, Tuesday, Wednesday, Thursday, Friday. If I'm only trading Tuesday, I can still make money, right? Why the hell do I have to trade every day? I also, just to answer your question, the second part, I do not have a 9 to 5. This is what I do full time over the last year and a half. But anyway, any other questions? This is last time. Anything else? Yes, I will be posting this recording probably later tonight and or in the morning. Well, I appreciate you guys for listening. I hope you enjoyed this type of format. Hope you learned some cool stuff. If you have any questions that you think of after the fact, always happy to answer anything. Just message me privately, either via Discord. So I'll put this one more time. There's my Discord information. There is my Telegram. And then here is my YouTube. So I have tons of different information here. Hope you enjoy. And if you are considering education and you think you are struggling and want help, feel free to help me up. Always happy to help. I am doing a 30-hour mentorship starting in about a week or two. So if you want more information, feel free to message me and we'll talk. Thank you again, guys. I will post another one. I'll do another Zoom session on Monday and then probably Wednesday of next week. So if you have any questions or anything you want me to post about specifically, feel free to message me and I'll make a topic for you. But anyway, thank you again for your time. Hope you learned stuff and enjoy the rest of your night.